Ray Dalio's journey from a middle-class kid in Queens, New York, to one of the world's most powerful investors is a story of sharp intellect, relentless curiosity, and a philosophy so unique it has reshaped how money is managed globally. As the founder of Bridgewater Associates, the world's largest hedge fund, Dalio's Billionaire playbook is part strategy, part philosophy, and part cult-like culture that's both admired and criticized. His rise reveals secrets behind managing risks and wealth, while the scandals that followed expose the challenges of power and transparency in finance. Today, we're diving deep into the secrets, scandals, and singular culture that define Ray Dalio's billionaire empire. Ray Dalio was born in 1949 and grew up in a modest middle-class family in the Howard Beach neighborhood of Queens. His father ran a small furniture business, instilling early lessons about work ethic and enterprise. At just 12 years old, young Ray saved $300 from mowing lawns and delivered newspapers, then stepped into a brokerage office and bought his first shares of Northeast Airlines. That first taste of ownership and market thrills ignited a lifelong passion. Even as a teenager, Dalio marveled at how tiny shifts in supply and demand could send prices soaring or plummeting, planting the seeds of his future macroeconomic obsession. After graduating from Long Beach High School, Dalio headed to CW Post College on Long Island, where he earned his bachelor's in finance. Fired by curiosity, he devoured books on economics, psychology, and history, convinced markets were reflections of human behavior. He then achieved his MBA at Harvard Business School in 1973, joining a select few grappling with the interplay between theory and real-world cycles. At Harvard, Dalio challenged professors, argued that orthodox models missed critical feedback loops, and began sketching what would become Bridgewater's research-driven approach. In 1975, armed with $1,000 in savings and lofty ambitions, Dalio launched Bridgewater Associates from his two-bedroom apartment in Manhattan. His vision was simple yet radical: build an investment firm grounded in systematic macroeconomic research rather than gut instinct. He pored over global data, interest rates, inflation figures, trade balances, and tested hypotheses on paper before risking real capital. Early clients were modest, mostly family friends, but as Bridgewater's small portfolios grew, Dalio reinvested profits into expanding research staff, convinced that a rigorous, data-first model would ultimately outperform traditional money managers. Dalio's next big breakthrough came in the late 1980s with the concept of risk parity. Rather than allocate equal dollars to equities and bonds, he argued for balancing risk contributions across asset classes. By calibrating leverage so each bucket, stocks, bonds, commodities, shouldered the same volatility, Bridgewater crafted a smoother return profile in turbulent markets. In 1996, this approach underpinned Bridgewater's all-weather fund, designed to thrive whether economies expanded or contracted. The strategy's resilience during the 2008 financial crisis cemented Bridgewater's reputation, drawing billions from pension funds, sovereign wealth funds, and endowments around the world. At the heart of Dalio's empire lies radical transparency, a management philosophy demanding that every idea be open to scrutiny. In practice, this meant real-time feedback. If you spoke up in a meeting, colleagues would rate your contributions on the dot collector, a proprietary tool that aggregated ratings on parameters like clarity, logic, and creativity. Every conversation, every decision, every mistake was logged and analyzed. Dalio believed this openness fostered the best ideas, unearthing blind spots and eliminating groupthink. Bridgewater employees were encouraged and required to challenge authority, even Dalio himself, in the pursuit of the truth. This candid culture delivered undeniable benefits. Bridgewater engineers spotted mispriced risks faster. Researchers quickly corrected flawed assumptions, and decision-makers drilled deep into contentious debates. By treating mistakes as learning opportunities, Dalio built an organizational machine that adapted continuously. While other firms faltered under stress, Bridgewater's teams leaned into open disagreement and collective problem-solving. Profits and AUM swelled, and Dalio began sharing his principles broadly, first on an internal website, then in his 2017 bestseller, Principles, Life and Work, exporting his management manual to corporations and individuals globally. Yet radical transparency harbors a darker side. Critics describe Bridgewater's culture as intense, sometimes brutal. Constant peer critique can feel like a never-ending performance review, breeding anxiety and burnout. Some former employees likened the environment to a high-pressure boot camp where emotional vulnerability was exploited in the name of truth. While open debate can yield brilliant insights, when untempered by empathy, it risks crushing morale. Questions persist. At what cost does this level of honesty come, and is it sustainable in the long term? Dalio himself acknowledges these tensions. In interviews, he warns that his methods aren't for the faint of heart. He stresses that transparency must be coupled with thoughtful management of sensitivities. In Principles, he outlines practices for delivering feedback compassionately, knowing when to dial back and when to push harder. His aim is to create an environment where debate sparks growth rather than fear. Yet in a world of egos and emotions, finding that balance remains a perpetual challenge for Bridgewater's leadership. Bridgewater's outsized influence and secretive strategies have also sparked external controversy. As the world's largest hedge fund, managing over $150 billion, its trades can move markets. Regulators and competitors have questioned the opacity of its risk models and the ethical implications of wielding such power. Dalio's frequent public commentary on capitalism's flaws, wealth inequality, and the role of central banks has drawn both praise and ire. His warnings about unsustainable debt levels and potential market meltdowns, though prescient, sometimes stoke fears about self-fulfilling prophecies. In 2020, Bridgewater confronted new trials. The COVID-19 pandemic upended global markets overnight, forcing the firm to adapt to remote collaboration while maintaining its high-intensity analytical rigor. Simultaneously, Dalio faced a personal health scare, hospitalized with a serious heart condition. The episode served as a stark reminder that even the most powerful figures remain vulnerable. Yet true to form, they treated the crisis as a learning moment, refining contingency protocols, enhancing digital feedback systems, and reassessing the human element in Bridgewater's culture. Despite these upheavals, Dalio remains deeply involved at age 75, mentoring emerging leaders and overseeing strategic initiatives. He invests considerable time in developing Bridgewater's next generation of portfolio managers and researchers, believing that institutional wisdom must pass hands carefully. Outside the firm, he continues speaking at global forums, teaching both finance and philosophy and refining his ideas about the machine of the economy. His message is consistent. By understanding patterns in history and human behavior, we can build more resilient systems. Parallel to his financial empire, Dalio's philanthropic footprint has expanded dramatically. Through the Dalio Foundation, he has pledged over $2 billion to causes including ocean health, education reform, and public health innovation. He launched the Ocean X initiative to map and protect the ocean floor and seeded scholarships for underprivileged students to study economics. His giving philosophy mirrors his investment approach: data-driven, outcome-oriented, and focused on systemic change. Dalio insists that true success combines wealth creation with tangible social impact. Ultimately, Ray Dalio's Billionaire playbook transcends mere money-making. It's a blueprint for building organizations that thrive on truth, systems thinking, and relentless adaptation. His success underscores the potency of blending analytical rigor with psychological insight, yet his story also warns of the pitfalls inherent in extreme cultures and vast influence. Bridgewater's journey reveals that power untempered by empathy and transparency unbalanced by humanity can sow discord even as it drives innovation. Dalio's life is a lesson in balancing power with humility, ambition with ethics, and innovation with responsibility. Every fortune is the sum of countless decisions, principles, and personalities. In Dalio's case, those ingredients forged a hedge fund powerhouse, but not without controversy, sacrifice, and hard lessons. His story challenges us to consider: how do we build systems that harness truth without destroying trust and drive progress without overlooking the human cost? Thank you for joining this deep dive into Ray Dalio's billionaire empire. If you found this video insightful, please like, share, and comment below. Do you admire Dalio's radical transparency or question its toll on culture? Subscribe for more stories of power, wealth, and human complexity, and hit the bell icon so you never miss an update. See you next time.